Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar survived a key test last week at the 60-day simple moving average, which was seen around 67 cents, and from there has ended the week on a positive tone, as the US dollar index, which measures the greenback strength against a basket of six major currencies, slipped from 103.15 to settle at 102.88 in New York. Last week, hotter than expected inflation data hasn't altered expectations for a quarter-point rate cut by the US Federal Reserve in November. Along with that, we do get the US presidential election as well, so no doubt things will be starting to heat up as we draw closer to November. Earlier calls for a half a point cut has now faded as a stronger economic data emerged. Last month, the Fed cut rates by 50 basis points, shifting its focus to maintaining growth as the US dollar advanced after inflation concerns eased despite two higher than expected reports this week. One being the September CPI, which rose by 0.2% month over month and 2.4% year over year, while the PPI remained flat and the jobless claims jumped to 258,000, exceeding forecasts. So as I mentioned, from the bounce from the 60-day moving average around 67 cents, sets the tone slightly positive this week. Keep an eye out for China's data and also the Australian employment change. So as I mentioned, the balance of the 60-day simple moving average around 67 cents. All eyes will be on the top side now to 67.55, which could exceed on to 68.15 before supply or profit taking emerging. Any pullback is likely to be limited, with the base still holding somewhere around 66.75 to 67 cents. Turning to the euro, it has struggled to recover from multiple declines last week, with the bearish momentum pushing the currency to a fresh two-month low around 109.25. Surprisingly though, from the lows around the 109, the market has bounced and posted on Thursday a Japanese candlestick hammer, but to the weaker side. Nevertheless, there is bullish divergence coming through, and along with that, with the US dollar taking a pullback, could see a recovery into this week, as all eyes will be looking to the European Central Bank when a 25 base point rate cut is expected. As the base is expected to hold around the region of 108.80, I feel the market could take a challenge back to 110.10.15, and from there a reassessment should be viewed. As I always say, traders should monitor signals and adjust their risk management strategies due to the high volatility expected this week. And no doubt there will be a lot of whipsaw play, and therefore could see both sides of the range contested. After four attempts to the top side around that 149, it's still seeing some supply and some bearish response. Although the technicals are somewhat buckled, but the ADX is holding to a bullish trend, we should not discount further tests towards that top side, but we could still see a bearish ambush around the 149 zone, which could trigger a significant downturn, with the target holding around 147.5. After witnessing another down challenge, the market is finding support close towards the region of 129.60 to 130. I think this market's a little bit overextended and therefore does expect to see a bounce. They could see a move back to 131.5 to 132 and reassess from there. Having witnessed a strong negative pattern being the Tri-Star Doji, spot gold has shrugged off weakness to close positively on Friday, following earlier in the week a strong bounce from the key support level and target of 2,600. In light of the pattern though, if we see a break above the level and a New York close of 2,666, this would negate this pattern and therefore expect to see a further climb to reinstate the target of 2,700 and reassess from there. As some traders may continue to trade this market, still be on your guard and monitor signals, as high volatility and whipsaw price action may again or likely to be witnessed. Wrapping up with oil, the market is still contained in this $71 to $77 range, and closing on a mixed note may see a pullback in light of the weak RSI. Nevertheless, the market is still likely to trade within this band, given the fact we're seeing the whipsaw price action from 71 and also the rejection given the engulfing candle from $77. So likely to find still overall the market pulling back, but rebounding back to test that top side because the ADX is still holding to a somewhat bull trend. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new week.